JB Knowledge Podcast Network.
On episode 80 of the InsureTech Geek Podcast, talking about exploring value creation in auto insurance with Doug Ver Mulm from Stable. The InsureTech Geek Podcast, powered by JB Knowledge, is all about technology that is transforming and disrupting the insurance world. We'll be interviewing guests and doing deep dives into specific technologies that we see changing the industry. We're taking you on a journey through InsureTech, so enjoy the ride and geek out. All right, everyone. It is, we are recording this the first Friday of March here in Texas. We're finally getting the first part of spring weather, and it's been kind of unusually cold winter here. Definitely don't want to complain because I know many of you in listener land have much worse winters, a lot of snow, a lot of cold, but it's been kind of unusually cold. Usually it's kind of a seesaw here based in San Antonio where I am recording from, and it's just been pretty steadily cold, gray, and miserable most of the winter. And so finally the sun's out. It's getting a little bit warmer. Could start putting on the short sleeves even. Not quite shorts weather, but we're getting there. So I'm excited to have with us Doug Ver Mulm from Stable for this week's podcast. And Doug, where are you joining us from?
In West Hartford, Connecticut. Yeah, so it's a little bit colder up here.
Yeah, still cold up there. So any signs of spring or still in the middle of winter for you?
So we get teased a lot, I feel like, on the Northeast. So we will sure have a 60 or 70 degree day coming up here and then blanketed with snow probably for another 3 to 4 weeks after that. So we don't get our hopes up.
I guess it's smart to do that, but it is kind of a tease, right? But it's better to know that the other shoe is going to drop for sure. So before we get started on our interview, don't forget that you can subscribe to the InsureTech Geek Podcast by texting Geek Out to 66866. That's Geek Out to 66866. Make sure you never miss an episode. So we're going to go back with Doug Ver Mulm from Stable. And Doug, thrilled to have you on the podcast with us this week. And before we jump into Stable and learning all about the company and really kind of exploring value creation in the auto insurance industry, which has been pretty stagnant for decades, I dare say, let's talk a little bit about you and your background. So looks like you, similar to me, are a Big Ten guy. I see Northwestern, or is that Northwestern College? Is that
North? Yeah, it's a little bit different. Still in Big Ten country, but not a Big Ten school. So a small liberal arts school in Northwest Iowa, where I grew up. It's my first 22 years there. Eventually made it out to Chicago, so closer to that Northwestern. But grew up a Hawkeyes fan, so still root for them. They're doing all right this year. Looks like they'll make it to the big tournament. So pretty exciting times for that Big Ten team anyway.
Yeah, and you, like me, were an economics major as well. So let's just talk a little bit about your childhood growing up in Iowa, and what did you think that you would be doing for your career? And I'm going to guess it wasn't in the insurance industry.
It wasn't. Growing up, I actually wanted to be an astronaut. Something I think a lot of kids want to do, but I took it to the next level where I convinced my parents to allow me to go to space camp. I was very close to convincing them. I think I was like in fourth grade at the time, into doing pilot's lessons and trying to figure out like what that actual roadmap looked like. Unfortunately, like in the 80s, when I was trying to do this, my eyes went bad. And so then it went really bad, where I needed like bottle glass type glasses. And so that wasn't something, laser surgery really wasn't on the market at that point. So that dream was dashed. But I think the science and the technology component of that was something that I just held a lot of interest in. And ultimately, the first part of my career didn't get into that, but it's something that just in the background percolated from like a hobby perspective, and kind of the regulatory stuff that I did work on earlier in my career kind of like teamed up with more of the science and technology portion of my hobbies and interests, and that kind of led to where I am now. So the econ stuff. I worked in a startup. My first job out of school was working for a small. We did a lot of technology automation for trust departments around the country. So small trust departments in towns in Texas, Alabama, Ohio. Not the top 20 cities in the U.S., but places where you would deal with a lot of kind of manufacturing type businesses where they would have small pensions or things like that. And these trust departments wanted to automate a lot of the portfolio management that they were doing. And so we had a company where we did both that automation, but then also kind of the actual financial work behind it. That's where I met my first co-founder, Stephen Decker. So him and I think I was employee number one. He was intern number one, and then became an employee number two. And him and I built a really good relationship, working for about 2.5 years at that startup. And fun fact, one of our current investors is the gentleman that started that, guy named John Crossan. So it's kind of nice having that group of people that you've stayed in touch with for that long to continue to evolve relationships and kind of work on things together. So it's fun.
Yeah, so that's a great beginning. And I know at one point you decided to go to law school and graduated from Seton Hall University School of Law. So what prompted the move to go to law school?
Yeah, so that was interesting. So I had an opportunity to work for a law firm, not as a lawyer. So right after working at that startup, a friend of mine worked for a law firm in DC, like a white shoe law firm that got stuck with an antitrust case. So it was Visa was our client. They were getting sued by the Department of Justice for antitrust violations, and by many other companies as well. And so I was working on a team of I think there's 300 attorneys on this case. And a lot of these attorneys had no idea about, basic economic principles, especially around antitrust. And, they're going and deposing people like Kenneth Chenault and, the Amex CEO at the time, other people who were heavy hitters in finance. And so my first job at this law firm was just to help attorneys kind of prep for these depositions with people who understood a lot more about finance than they did. So kind of consulting for them and working with them. And that was a super interesting case, not working as an attorney, but working around those attorneys. That kind of led to my interest in wanting to get into the law. Law school is great. I love law school. The theoretical stuff that you work on. The practice of law, I found out later on, I started working for a company called Mercer, so one of the Marsh McLennan companies, working on very interesting things. So more using some of my technology interests and background. While I was in law school, I kind of kept up to date on how code. So I refreshed my skills on Python, kind of taught myself JavaScript, a few other things in downtime during law school. I was continuing to work on some of my own projects. But used some of that skill set to help from a data security and intellectual property perspective at Mercer and dealing within their contract department, working with their outside counsel. So that's kind of how I weaved myself into insurance, had no intent to go work for an insurance company, knew nothing about insurance. I think even when I started Stable, had a kind of an understanding of insurance, but I've learned so much in the last 4 years of starting Stable that I feel like I'm just now able to hold my own with even one of my co-founders. And now that we bring on real insurance talent, like our claims guy, who'll talk about a bit, but these guys still know, thousands times more than I do, just given my limited exposure to insurance up to that point.
Yeah, no, fascinating and great transition kind of from law school to your role at Mercer, which I know is a name that most of our listeners are going to be familiar with. So before you went from Mercer to Stable, you were also the co-founder of a rideshare fleet, and maybe that was the first time you got exposure to this new concept of using an app to get in a car with strangers. And there's something that the old man in me said, we would have never seen. And then, 2-3 years later became kind of an indispensable service that I used all the time in my travel. So tell us a little bit about that transition and what that was all about.
Yeah. And so I think within 1 year of working at Mercer, I kind of realized that I was not cut out to be an attorney. It just wasn't enjoyable to me. I love the people I worked with, loved working at Mercer, and loved the whole Marsh family. But the working as a corporate lawyer was not really what I thought I was going to do for the rest of my life. So I started playing around with different ideas, different side projects. And I was probably within the first 100 users of Uber in late 2010, early 2011, I think is when they came to New York, but it was just black car at that point. Like it wasn't UberX as kind of like it's more ubiquitous now. You would truly order, like you get a huge SUV or Suburban or like a really nice Mercedes or black car. And it was heavily discounted because Uber had all this VC money even early on. So as somebody just getting out of school, it's like, oh, this is great. Like I can for $30 get a really nice car. You take it on dates, or just pick up friends or whatever it might be. Pick up my parents from the airport, I think once. And so I would talk with these drivers a lot and try to understand, or just have conversations around how they were getting their vehicles and understand the licensing process in New York and the insurance process in New York, which is much different than a lot of different parts of the country. And maybe it was like 2014, I kind of realized that a lot of the players in the space were relatively shady. Think about somebody, like all good people, but I think getting a rental car from somebody in Queens to do rideshare stuff, you probably have thoughts about what type of organization that might be. And thought to myself, like, could I actually produce like a better product for people who need to rent these vehicles, and something that's a little bit more transparent and can be dealt with digitally? So we built up it's very rough product around distribution. So a driver could rent through our platform, and they could do all the maintenance requests through the platform. And the whole goal for us, we were just lazy, the two of us that started it. We didn't want to have to actually manage the fleet. We just wanted people to pick up the car the first time, then deliver it, until the car like broke down and couldn't be used anymore to the next driver, and so on. That worked not as often as we had hoped. And so we realized that we needed to start thinking about how we were bringing these drivers on. So how do we choose better drivers to make sure they pay on time, they don't abandon the vehicles, and don't get into accidents as well? That was kind of an afterthought, but it's really around like kind of credit management and income management. And at the time, I think it was in 2015, Uber started making some data available via API. So we could apply for the use of it. We kind of put our business case out. We have a small fleet. We're trying to understand these driver profiles and who we should be renting to. And so we started using that just from like a credit modeling perspective to determine who we were going to rent to. And it did have a substantial increase or decrease, I guess, in the number of issues that we had just by doing some of that light credit modeling. So we do things like try to understand, are they earning enough over a certain period of time to actually pay this weekly rental? Do they have a good community score, good crowd-based driver score? And one of the other things we started to realize was there's like a lot of interesting loss control and risk data available as well within there. And what we started to realize was that the fleet that we had built, so I think we got up to like 35 cars at one point. And the goal was we wanted to actually build like a large fleet around it. We had some private equity interest in what we were doing, just like how we were able to automate. It's very interesting from an ROI perspective, but a very asset heavy business. So something that's not really venture interest, but more of like a private equity or hedge fund type interest. But the issue we always came up with was they would look at our financials and they're like, you have this static insurance cost that just never changes. Doesn't matter how well you're operating, how much risk control you're kind of putting into this. That number just like continues for eternity, good or bad. And we're like, yeah, that is a problem. We could see how if we were trying to scale this up, that not shrinking is going to be a problem from an ROI perspective. So we went to our insurer, small insurer in New York. There's essentially two insurers in New York that do Uber and Lyft in New York City, and said to them, hey, we're collecting all this data. We have the beginnings of what we think is interesting loss development within our fleet. Is there any way we could work with you to get a better insurance rate? And they were interested in it. They were open to discussing it, but they just didn't have the capabilities to actually do that, to say, hey, we'll take this data in, we'll figure out how to underwrite you in a different way, and then do this in an automated way where we can like consistently make this successful for us. And so with that kind of started, I think this is like 2017, 2018. And I realized the more interesting thing to work on was kind of the insurance problem. So I went and talked to other fleets, talked to a lot of individual drivers. And that's when we made the realization that the insurance part of this is a much more interesting and fruitful problem to solve. And it's only going to become more so as different types of mobility get put on. So the hybrid use of vehicles, these platforms that are looking to put as many drivers on that they do some background checks on, but maybe not like full background checks. It's not like they're doing trucking or anything like that, where you have drug testing and things, where you really are certain that this is going to be a good driver and as least risky as possible. So that kind of that fleet allowed us to get to stable, and really a lot of some of the technology that we have now is born out of that fleet. Definitely the understanding of the business model was built out of that fleet.
Yeah, no, fantastic. Thank you so much for sharing that background, Doug. So you eventually leave Mercer, you start Stable. What were the markets that you were, originally targeting? And then how has it evolved over the course of time to where we are now in 2022 at a high level?
Sure. Yeah. So the first thing I did is I went back to that gentleman I talked about earlier, Stephen Decker, so the guy that I worked with and with at a company called Main Street, that trust automation company. And I said, hey, this is what I'm working on. Like, this is, some of the financial stuff that I put together, and these are the competitors. Really, once he looked at the competitors, he's just like, okay, this is super interesting. There's no automation going on. So I think, the companies that were making waves at the time were like Lemonade, obviously, a few others that were talking about kind of like just building a better front end, but automating a lot of the processes. So we looked at them as not necessarily roadmaps for us, but just thinking about like the market in general and how we could improve our product or the product that we wanted to offer. So we knew New York very well after a period of time, New York City very well. We had been making a lot of connections within the space amongst fleets and individual drivers. And we had built some of our own technology around distribution and handling claims in a better way, and then automating a lot of the internal underwriting processes. And then the big thing was the data collection for us. We thought that was very meaningful. And it was. So what we did was we went out to reinsurers, and I think we probably talked to 30 different reinsurers, and everybody was interested. But we got the feedback almost in chorus, unison of chorus was, okay, guys, like there's no insurance person here. It's you and Steven. Like, you seem, nice and bright and like you could maybe do this, but like you have no idea about any type of insurance, like P&C insurance. So that's kind of a check mark against you. You want to do this in commercial auto, like livery of like the really terrible section of commercial auto. And then you want to do it in New York, and not even just in New York City. So like, why are you setting yourselves up for like the most difficult challenge, like right out of the gate? And so we had about 2 years of those discussions, and we still have like a lot of customers that are interested in using us in New York. And I think at some point we realized we can't get our product live there first. We did, interestingly enough, one of the company that we were working with as the fleet, the small insurer that I talked about, they came back to us and said, hey, why don't we try and work together? You guys can act as a digital broker for us and start supplying us some of this data. And then maybe we can work on a product together to improve the market overall. So it was really interesting to us. We did that for about a year. A couple of things outside of our launch happened. So we launched that product with them on February 13th of 2020. Probably the worst time ever to launch a rideshare product, right? With what events that ensued afterwards around COVID. And so we got about 9 months into that relationship and we realized that carrier, they were small enough where they're like, we just need to figure out how to survive through COVID through the next 2 years or 3 years, or God knows how long this is going to last. And I think the other thing we realized was there was a lot of ambition within the owners of the company that didn't really filter down to the rest of the company, and almost some people that we would have to deal with on a daily basis saw us more as a threat than like an enabler to them. So we decided to amicably part ways and try to focus on other parts of the U.S. And so we went out and spent about 6 months. We worked with Guy Carpenter for a bit, so kind of like drummed up some of my old Marsh connections and got involved with Guy Carpenter's InsureTech unit. Great folks there that were very helpful in getting us in front of reinsurers again. But then just by happenstance, stumbled upon a woman named Gloria Gontinas, who I think was on your show maybe 2 or 3 months ago. And she was working on a company called Pouch at the time, like her own company. But she was also working on this idea of a true insuretech accelerator. So something where not only do we help you with maybe some of the thoughts around sales and marketing and raising money like an accelerator would, but we're going to bring capacity behind that. We're not going to help you find capacity. We have capacity ready to go through their relationship with ILS Capital Management. And so that was really interesting to us. And so we started talking to them this summer and realized like the lack of data that we had on the market wasn't a concern to them. They were really interested in trying to experiment in the space and allow startups the risk capital necessary to get started. So we've built a great relationship with them over the last 6 months or so, nine months now almost, and have focused. We still have a focus on fleets, but we've realized that there's also a lot of drivers who are doing upwards of 20 hours of rideshare per week. And then there's also kind of like ancillary mobility spaces that are very interested, and from a risk perspective and from the way we write our insurance contracts are very similar to rideshare. So things like car share, obviously delivery is a big one right now. But even like kind of like not the way you think of delivery of I'm getting DoorDash, I'm getting my noodles. Delivery like Amazon. So kind of the trucks you see going around, things like that. So this concept of on or off platform and having kind of a contractor or renting out this vehicle for some use to, could be somebody today and somebody completely different tomorrow. And so that's kind of how we've evolved. And from the insurance perspective, I guess the way we think about it is the insurance is key for a lot of these drivers and for a lot of these small fleets. Like it's absolutely needed for them to continue operating in a cost-effective manner. But because of the data that we started collecting, whether it's from an Uber platform or a Turo platform, there's a lot of other things that we can kind of layer around, a lot of different analytics and decision-making tools that we have the ability, we have the data, and then kind of the software ability to build for them. So rather than having to pay for something different, a fleet management platform, is that something that we can provide you or give you access to? So we think about that a lot. Like our core product right now is definitely the insurance side, but using individual drivers, rideshare drivers, for example, we have a driver report that we give them. So it kind of rolls up and consolidates all of their earnings across different platforms that they're working on. So not a lot of drivers do this, but they should be doing it. You should understand, like, is my time that I'm spending actually worth this, right? Am I only making $10 an hour? Am I actually making $25 or $30 an hour? So we try to help them understand their top line, then understand some of the expenses that they input some of the expenses that they have, and then understand if they're just making good use of their time as a driver. And that's really interesting for them because that's some drivers that do that, they have to like pick through their driver reports and probably spend 2 hours on the weekend trying to do that. And that just stops a lot of drivers from doing it. So the fact that we can do it in, just by doing an API call to the networks that we're already working with, roll that data out for them, they can spend 5 minutes on the weekend instead just saying, okay, like, is this something that I should do this next week? Or did I just make so little money that it's no longer worth me doing this?
Yeah, I want to keep going on this idea of kind of that enhanced value creation, Doug, because I find it really fascinating. And I know I've talked to, my share of Uber and Lyft drivers over the years, similar to you, just kind of fascinated about their stories, how they got into it. Everyone had a different story. Sometimes it was part-time. I know one guy in the Arizona area, he just said, hey, I live in the Phoenix area, but my office is in Prescott, Arizona. So whenever I'm making the, hour and a half drive up or hour and a half drive back, I just, flip it on platform. This guy's kind of in his mid 60s. He's doing well financially. I think he had his own insurance agency, if I remember correctly. And so he made a lot of money, but that wasn't even the point for him. The point for him was basically have a buddy to ride with, right? Somebody new, somebody who's
right.
Definitely an extroverted type person, and he always enjoyed the conversation. Whereas other people, clearly, right, it's really their job, kind of a full-time income. They are running a small business, maybe the smallest business that you can have. And definitely, they all have strategies, right? Well, I go early in the morning and I do this, or I do the airport runs, or I try to do late at night. And then some people say, well, I don't want to do late at night because then people are drunk and they throw up my car, right? And then I got to pay extra to clean the car, things like that. So yeah, tell us a little bit more about kind of going beyond just that. Hey, you have to buy insurance, you bought us, and now hopefully you never have to think about us unless, the worst happens, you file a claim, of actually giving them value added, before that claims experience happens? I assume you'll be there if they do have a claim, but like, what are some of the other things that you can do to show them the value that they have by partnering with Stable?
Yeah. And it's funny, like I think a lot of this was developed from reading some of the insured stuff. Like we're on that Slack channel. Coverager talks about this all the time. I feel like this like lack of touch points with an insurance customer. And I don't know that we have that solved yet, but we think about it almost every day. Like, why would a customer think about us today on a day that they're not, hopefully not getting into a claims event? And, maybe once a month, they're actually making a payment to us. Also not something maybe what your brand associated with on a consistent basis, right? Not, they know they have to pay it, but is that the only thing that they're doing with us? And so we love this idea of just trying to push additional value through. So we talked about the driver report a little bit, just a way to understand, like a very simple tool to understand, are you spending your time correctly? We're working with companies like Marble Pay to figure out ways that we can actually add additional benefits into our platform. So are there things specific to this driver base that they need? Things like, obviously, they're driving many, many more miles than a typical auto user would. So their tires are needing rotating more often and replacement more often. They're obviously getting oil changes more often. They need to clean their cars more often. So building up kind of like a benefit ecosystem around those types of things, where if we can help them if we can help provide discounts to them and then provide more users to that vendor, are there ways for us to kind of share in those benefits with our users? We think about it from like the risk protection, like advanced risk protection. So like helping you understand like some of the things that we're doing, hopefully stop you from ever being in a claim. But if you are in a claim, hopefully we are able to ascertain like the genesis of that claim much, much quicker. So we're huge advocates of dash cams. And I think there's kind of this debate within personal auto, like, do I want a dash cam? Do I want, from a privacy perspective, do I want, telematics? Do I want my vehicle tracked, my driving behavior tracked? And there's still that issue with rideshare drivers. But more often than not, they realize like, hey, I'm already being tracked by Uber. Uber's tracking me, Lyft's tracking me. This data is being collected on me. So if I understand that Uber and Lyft and whatever platform I'm working with is having some advantage by having this data from me, can I put my data that I'm creating to work for myself? So when we think about that, we're like, if you're willing to allow us to put a dash cam in your vehicle, we have the belief that our defense costs are going to be much lower. Even when our drivers are at fault, it's going to be much easier for us to understand whose claims responsibility that is. And not even that, just by having so cloud-based is really like our preference for dash cams because it allows us to kick off the claim almost immediately. So a lot of times we can tell if an accident has taken place shortly after that accident, send a text message out to the driver and say, hey, like we believe you've been in an accident. Here's some steps you should take to make sure everybody's safe. Contact the police. Make sure you get a police report. Sometimes that doesn't always happen. Get the other driver's insurance information. I would say half the time when we were operating as a digital broker in New York, had no idea who the insurance was with, right? So we'd have to run like a license plate search and then track that driver down, track that insurance company down. It would take a long time. So just make sure you've taken like the correct steps as a driver to help us resolve this claim for you much faster. And then I think just like the positioning where we understand like these drivers are using this vehicle for income generation. So you talked about the gentleman, that travels back and forth between his office. That driver, obviously, when a claim takes place or when a claim takes place for you or I, we want our car back as soon as possible. But it doesn't kill us if we don't have it, right? Like I'm still gonna be able to pay rent next month if I don't have my car. Whereas these drivers, a lot of them, at least for a period of their life, this is a large portion of their income. And so if we don't have a replacement vehicle for them almost immediately, like the claim should have, like we should be able to help the car get fixed very quickly or replaced very quickly. But even then, like sometimes that's outside of our control, like supply chain issues right now. It could be held up for 2 weeks, like waiting on a part. So do we have a car that you can actually use on Uber and Lyft to help replace that? So it's really just thinking about like, what does this customer need and making sure that we've supplied it for them versus like, Other policies are great. Like I think, the incumbent policies that you can get with the riders, like they're priced well, and they fit the regulatory needs that you have for the state. But are they, there's still a personal auto policy that they've kind of layered some solutions on top of. Our view is like we need to tear this all down and kind of think about what's the first, second, third, fourth thing that this driver needs in the event of an accident, and making sure that we supply those first and then layer the other things on top of that.
So Doug, I want to nerd out a little on the insurance side here. And I know from my many years at USA, risk segmentation is such a foundational part of insurance. And I talk to organizations all the time about traditional variables such as age, gender, and marital status. Obviously, there's a whole lot more information now that you can get today at your fingertips with telematics and some of the data that you're able to collect and go beyond a lot of those traditional rating variables. But obviously, determining the appropriate amount of premium to charge based on the risk, and this is I know a lot of the largest insurance companies, such as Progressive and others, talk about billions of pricing cells, that they have to really refined view of risk. So can you tell me a little bit about, I would imagine you've got kind of some unique challenges, yet unique insights as well from the population that you serve at Stable. So how are you approaching this challenge?
Yeah. And so, we do think about risk segmentation. So Multiply's background, Gloria and Steve McKay, the two founders of Multiply, both have roots in Progressive, and then some of the talent that they've brought on to help out also have Progressive roots. So they've like that idea of being able to segment, I'll write a policy for you. You might not like the price, but I'll write it, right? We think about that. And we definitely want to we apply both a carrot and stick approach. So using the dash cam thing as a video, like that's a huge segment for us. Like if you are self-selecting into a dash cam, like you are going to get a very good rate from us. If you're not, we'll still write a policy for you, but maybe you want to go somewhere else because you could get a better price elsewhere. So we think about it from like a driver behavior perspective, but even then, and like actually Gloria and I would probably have slight disagreement on this, like the benefit of underwriting via behavior, I think, is still somewhat to be proven out. We've seen some companies try to do that, and either they're doing it incorrectly, or it takes more time to develop than maybe was initially thought, or we're just looking at the wrong things. My view is like every city and area of the country is a little bit different. So an example would be if I'm doing kind of like a blanket behavioral based underwriting on, let's say, harsh braking, and all I do is drive on the BQE, this freeway between kind of Brooklyn and Queens, it's going to look like I'm an awful driver because I am hitting the brakes every like 3 seconds, and I'm probably hitting them very hard because of the bumper to bumper traffic. So there's a lot of considerations, I think, that go into play whether or not like that type of behavior-based data makes sense, and then where it would make sense. So there's just a lot of work that's needed on that. Not that it can't be done, but at the end of the day, I kind of think, is that as valuable from an underwriting perspective versus just the fact that I have dash cam footage from you getting into an accident? I'd pick the dash cam footage over like the ability to have a telematics solution. And then there's things like experience, like definitely like actuaries aren't going to disappear, right? There's still generalizations that need to be made. And we have amazing actuaries that have a ton of experience working in the shared economy and auto in general. And so their jobs are pretty secure for a very long time. But we do think about it from a, how long have I been driving, but also what type of work am I doing? Am I doing rideshare? Am I doing delivery? Or am I doing like car share? Am I just dropping this off and actually have no risk because somebody else is actually taking this vehicle from me? And then even from like a rideshare perspective, like, am I driving mostly in the city? Am I driving mostly on the freeway? Like, am I going back and forth to the airport a lot? So I would put a heavier emphasis on the type of activity that's being done from a segmentation perspective, but then also like where that activity is being done, more than even like saying, hey, like, do I have 1 year experience as a driver or do I have 5 years experience as a driver? Like at some point, those kind of melt all together in our view. And we really are more concerned about, do you have the proper safety equipment in your vehicle, such as a dash cam? What type of activities are you conducting in? Like, you've a passenger in the vehicle, so you're driving a little bit safer, or do you have some noodles in the vehicle that are hot and you want to make sure they get to somebody within 5 minutes as you're driving like a madman because there's nobody to judge you at that point? So those are in our view, like the type of activity being done, and knowing that that activity could switch back and forth. Like that same driver that was just driving like a madman could then switch onto Uber and say, hey, now I'm gonna, like, I want to keep my 5-star rating, so I'm going to drive like perfectly for this person. So those are like really interesting problems that we think about. Definitely don't have them solved yet, but we love seeing that data come in to see like, hey, is that same driver like an idiot today, and then like tomorrow when they're doing rideshare, like the perfect, like if you just looked at that one day, they look like a perfect driver. So the segmentation stuff is very interesting. I love the background we've gotten from the Multiply team to be able to allow for that and hopefully write any policy that somebody would actually buy from us.
Yeah, so I have not ever driven for a rideshare service or done any deliveries, but I can tell you I'm fairly responsible driver. I haven't been to an accident in many years, but the last 2 days, my daughter was very much in danger of getting a tardy at school. So I might have had some creative driving that involved, cutting through gas stations the last couple of days. So yeah, that driving like a madman versus kind of the standard, I can definitely relate to that. So Doug, insurance.
There's one other, like another interesting thing to think about here is, especially like with age and experience, like I lived in New York. I just forgot to renew my license. And so for a while I didn't have a driver's license. I had to sit and do the test again, do the course. I'm 42, decent credit, like established from like a underwriting perspective. Like Progressive gives me a very, very good rate. But somebody who's like 21, 22 is maybe doing rideshare for a year, like terrible credit, not married, no education. Like from an pure actuarial perspective, that person's probably going to have double the premium that I have. But like they've been driving, maybe 50, 60,000 miles over the last year on rideshare. Like if me or that person shows up to pick you up from a rideshare perspective, take that other ride. Don't ride with me, because you're more likely to get into an accident with me.
Yeah, no, that's an excellent point. That's an excellent point, right? It's just the purpose, like you said, your familiarity. It just changes a lot of the assumptions that I think we've traditionally had, right, in either personal or commercial auto. So, as you know, insurance is a very conservative industry historically. And, you've talked a little bit about some of your experiences and partnerships, but I'm just wondering, there's these groups that we kind of call gatekeepers, whether they be agents and brokers, carriers, reinsurers, regulators. So what's your experience with those folks in our segment, and how have you been able to get buy-in?
Yeah, so obviously it is very conservative, very very risk averse, which makes sense for what's going on. I think we just ended up getting lucky. We had like a 6-month clock left where we said, hey, if we can't find this partner, we're probably just going to figure out what else we should do. Like, can we sell off some of this technology? Can we roll ourselves into another company? Can we go back to the company that we were a digital broker for? Should we work on something completely different? And it's really kind of pure luck, I think, in finding that partner that's willing to take that chance with you, especially when you have no data, right? So if you're truly trying to do something from a cold start perspective versus, I think, like others that have been successful in our space and great competitors in our space, they had a broker before. So they kind of had a number of policies that they had control over, and they could kind of tell, what these losses look like over a longer period of time, what their go-to-market strategy would be. And then they had a little bit more respect, I think, amongst the insurance community. And everybody's always been nice to us. It's not like somebody kicked us out of their office or anything like that. But it just never fell under their mandate, or we couldn't get them comfortable with what we were doing. So I think it's definitely like you need to find that partner that you can sell into and say, hey, like, you're buying into us being the expert in this, and that we have this idea, and we don't really have enough data to show you whether this is true or not. It's a hypothesis, right? We want to test this hypothesis. We can't do it without the insurance products. Are you willing to help us write that insurance product? And I think with Multiply and ILS, we found that. And I think other insurtechs, obviously, a number of them are getting started and continue to be started. So it's really just finding that insurance partner that kind of believes in what you're trying to do, that aligns on the vision, and is willing to help you execute on that. That's, I hate to say that it's something that comes down to luck, but maybe it's just like going out and talking to enough people and finding that, and then realizing if it is like really, really far out, the timing might not be right. You might have to put it on the shelf for a while or figure out another way to get moving forward.
Yeah, you mentioned Gloria and Multiply, right? And as we talked with her on an earlier podcast episode, I think that was the entire vision, is to support startups such as Stable that maybe, out of the box or a little bit different proposition, or isn't just the same as usual, but just with a small twist, right? And I think of companies like Lemonade as being much more akin to that traditional insurance, and they may be executing automation better or giving marketing better, digital interfaces better, et cetera. So not saying that they don't have value, but it's a little bit more just a variant on a theme, rather than you're really kind of building something that's more radically outside the traditional insurance ecosystem, and for good reason, right? Because risks are ever evolving and ever changing, and clearly this has been just a mushrooming segment that needs appropriate insurance solutions, and so you've been there for that. So as we wrap up, Doug, I'm just kind of curious. So what is next on the roadmap for Stable? What do you have on your radar?
Yeah, so we were very lucky with Multiply I mentioned they offer a lot of insurance support, but they're also I think they consider themselves like a mini VC. So they led our most recent round with one of our pre-seed investors, Brooklyn Bridge Ventures. So we kind of have the ability now to kind of get live in 4 states, and so we'll be doing that, executing throughout the year. Launching in Illinois first later this spring. So very excited to kind of get that product out into the market. It looks like it's going to be a joint, or we'll have the joint capability of selling both rideshare and car share as it stands right now. So excited to get out in that space. The car share stuff is also very, very interesting to us. This concept, and I didn't come up with this term, somebody else in the space did, that we've gotten to know, of distributed fleets, right? I'm kind of what I was doing with the rideshare side, but for car share. So I have 10 vehicles and I'm just trying to like create a passive income stream, or maybe replace my job with that. It's also interesting, like a rideshare driver who has like a lot of control over their schedule can start to do those types of things. We think about creating our own customers in that space as well. Going live in 4 states this year, and then trying to pick out kind of what makes sense for us in 2023. We talked to drivers, John, our third co-founder, John Salvucci, who is the actual insurance guy. I didn't bring him up yet, but he like gives us the credentialed insurance that we need. He's a former IA, and so loves talking to the customer, but he worked as an underwriter for a while at AIG. He's out talking to customers every day about specifically what they need and making sure that kind of the features that we're building are what is going to get them excited. It's fun to watch those videos because you like see people's eyes light up when we talk about some of the higher end features of what we're trying to do that just aren't being offered right now. And so, yeah, we're just excited to get that product out, start to see how people actually interact and react to it, how the community overall interacts and reacts to it. And then not that we're looking for claims, but I know our clients, we have this gentleman named Dylan Brand who came over from James River. So James River did a ton of Uber work right through, I think, 2018. He's seen the good and the bad of rideshare and has handled claims there for a long time. Really excited to have him on board. And some of the stuff he's building around the claims process, like how that interacts, because it's not always our claim. Sometimes it's Uber or Lyft's claim. So how do we help that customer through that journey? We very much believe that we're going to win or lose customers on the claim side of things. And so we're excited just to see if we're actually doing that right, if we're actually providing the value that we think we need to provide to customers. And like that's, as far as the insurance product is concerned, the most important point, of that journey for them. It's not going to happen to everybody, thank God, but those that it does, we want to make sure that we're doing right by them.
Yeah, fantastic, Doug. So for folks that want to learn more about where to find you or learn more about Stable, where would you point them to?
Yeah, you can check out our website, Stable INS, short for insurance. So just the initials INS. We're on LinkedIn. We have a company page on LinkedIn. I'm on LinkedIn. I'm on Twitter. Our company's on Twitter. You'll see, I think we interact every once in a while on Twitter. It's very interesting insurance community right on Twitter. That's fun to kind of like josh around with. So you'll see us on there. But check out our company page on LinkedIn. Just Stable Insurance. Same with Twitter. Follow us if you want to learn more. Always feel free to reach out. I'm just Douglas at StableINS.com. So if you want to talk about anything, I love talking. future of insurance, future of regulated risks, regulated sectors. So happy to have a conversation at any point.
Yeah, fantastic, Doug. Well, it's been a thrill to have you on, and wish you the best of luck. I'm going to pivot now as we wrap up the episode to a few news items for the week. The first one comes from digital insurance, and this is a headline that caught my eye. It says, "Insurers punished for intervention in digital claims." This is based on research feedback from J.D. Power. And they talk about the number of companies that have come out, of course, with digital claims offerings, maybe in the auto insurance space, right? You file a claim on an app, you take photos of the claim, you kind of submit it, and you're looking for a resolution. And what they found is that about a third of these claims are still requiring some type of physical inspection as a follow-up. That percentage has actually not decreased over the past year as more and more companies have become, embraced digital workflows, and consumers have embraced using those digital workflows. And so it's causing a lot of frustration from customers. When they are able to submit their claim online and submit photos, they're looking for not necessarily an instant resolution, but a very quick resolution. And in many cases, it's taking a week or more for claims adjusters to follow up. And then if there are some a manual need to have somebody physically take a look at the damage or things like that, that is causing a lot of frustration for customers. So, what are certainly possibilities that a lot of folks have been talking about can actually be negative customer experiences if not done right. And so I found that one to be a really interesting study. The second news items, Travelers has acquired the tech assets of the InsureTech Trove for personal insurance for an undisclosed amount. This is from the Insurance Journal. And Trove is one of those companies that when they started, I really was, excited for them, excited about their technology. And they've been through kind of an interesting journey. They actually started as more of an on-demand insurance product. The one that resonated with me is you think about maybe your expensive camera and insuring that only for the 2 weeks that you're on vacation, rather than on some type of personal article floater policy for an entire year. And I know it's actually something that I had taken a look at a traditional insurance firm to try to emulate, what they were doing. And we kind of realized that we'd probably have to charge 80 to 90% of the premium for those 2 weeks that we were for the whole year, because that's obviously when the assets are more at risk. They later pivot on to working with Waymo, the automated driving company, about offering some of their insurance, as well as pivoting towards an embedded insurance platform that people could use their technology via APIs. And so that's what Travelers is acquiring here. So it's a fascinating study, Trove, I think, of just some of the evolutions that InsureTechs go through, the twists and turns of the journey, and an interesting move for obviously a large company, Travelers. They talk in the article about their acquisition of a company called Simply Business that was based in the UK that is selling small commercial business online as well. So some interesting acquisitions from Travelers. And then finally, a fundraising announcement from Coverager on a recent guest that we had, Raheem from Plum Life. So they've raised their seed round of $5.3 million. And as we've talked previously on the podcast, there's a lot of insurtech and innovation going on in the property and casualty space, and less so in the life insurance side. And we've talked to some of those folks, such as Ladder Life and others, but Plum was one that we were kind of excited to see what they've been doing, and just happy to see that they've had a successful seed raise. So anything in those news items of the week catch your eye, Doug, or you think is intriguing?
Yeah, I need to pass on the claims article to Dylan, get his thoughts on that. But I don't know if it's great that that's happening. Curious how much of that is supply chain issue, not supply chain, but just like lack of workers, right? I think a lot of companies are having problems finding people to go out and carry tasks. So hopefully that's somewhat short-lived and gets solved out a bit. It's interesting with Trove, right? When in 2018, when we were starting Stable, saw them as a competitor and kind of had them on our competitive list. Really smart people. Scott's a great guy. Travelers is out of any incumbent right now, I think is doing some really interesting things on acquiring assets and kind of rebranding. And I assume there's going to be a Trove powered, Travelers branded, or they'll come up with a new brand name. I can't remember what they all are, but I've seen several new Travelers branded items, right? Digital items come out. So it's great to see that found a landing place. We were talking about like doing variations on a theme, and Trove never did that, right? They were really early, 2013, I think, is when they started, 2012, and doing something somewhat completely different that ultimately maybe didn't work out, but the willingness to take that risk and actually try and create new products within the insurance space. Obviously, that's something that we are trying to do. So I love seeing that, even if it's not ultimately maybe the outcome that they wanted. It's great to see that will live on, in another form. Agree with you on the Plum Life stuff. That the life stuff I don't know a lot about, but it's also very interesting. We were interviewing somebody from Bestow actually, and learned way more from him than he did from us, I think. So just super cool stuff going on the non P&C side of InsureTech.
Fantastic. Well, Doug, it's been a great conversation. I want to thank you for being on the InsureTech Geek podcast with us this week.
Thank you. Yeah, thanks for having me.
So for all of you in listener land, this has been the InsureTech Geek podcast powered by JB Knowledge, who's all about technology that is transforming and disrupting the insurance world. I am your co-pilot this week, flying solo, Rob Galbraith. You can find me at endofinsurance.com. And of course, you can find my co-host most weeks and the master of ceremonies, James Benham, at jamesbenham.com. Thank you to Jim Greenlee, our podcast producer, Kara Dalton-Aro, who's our creative producer. And thank you in listener land for joining us today. We look forward to talking with you soon. We're taking you on a journey through insurance tech. So enjoy the ride and geek out. See you next week.